Hey, how you doing, everybody? It's just Latorian Paul, your mentor, and I want to bring to you again uh, the easiest strategy that you can use to trade. So before I used the 50 and the 100 exponential moving average, but today I want to use the 20 and the 50. Why? Because the 20 and the 50 gives you a heads up, an earlier entry than the 50 and the 100 moving average would after the moving average cross. So, um, yeah. So I'm just talking about that. And I want to show you the benefits of using this on the 1 hour time frame. Um, it works on any pair. So I'm going to just show you. Same thing as before. Wait for a moving average cross and look for a break and retest after that moving average cross and trade in the direction of the moving average cross. All right. So here, let's look and see. We gotta let me get the box here real quick. We got moving average cross. And then afterwards, we look for a break and retest, which you get. Break, retest. When I say break, I'm talking about break of structure. So in order for us to get a break and retest to the downside, we need to get a break of support, and then we need to get a retest of that area. But when support is broken, it turns into a resistance zone. So you get a break of support and a retest of resistance. All right. Then it goes down and you can hold the trade till the moving averages cross again or until you're satisfied. So if you get out, here's a moving average cross. Here, you got in here, 350, 360 pips. If you got in here, you got out here, 570. So you're looking at anywhere between 360 to 570 pips as far as the range of what you could have made. And you just continue to do that same thing over and over again. After the moving average cross, look for a break and retest. Here's a moving average cross right here. If you want to trade in the direction of the moving average cross, and it's pointing down. Moving average cross from left to right says going down. We have a break and retest. All right, break, retest. All right, and then it goes down. It goes down. Right, and you can get out either till you're satisfied or until the moving average cross comes. So if you got out here, that'll kind of be defeating the purpose, but it's still profitable. 60 pips. And then if you got out at the lows, that's 300. So you're looking at 60 to 300 pips of play. All right. Now this is a simple strategy. Just patience. And you see, I'm not going to different time frames. Just trading where I am. All right. So and I'm gonna show you this. Make sure you see this. But the cool thing about having the MT5 uh, chart is that you can go. I don't know about TradingView. I haven't got over to TradingView. I don't think I'll be using TradingView because I like to see the MT5 charts. But the cool thing about MT5 is that you can go back to 2011 to look at charts, so you can do a proper back test and a proper space of time to uh, give yourself the ability to test the effectiveness of your trade strategy. All right, so let's go back to this again. Moving average across here. All right. Then we look for a break and retest. We had this break and retest here, nope. Break and retest here, nope. Break and retest here, nope. Break and retest here, yep. So we got a break and retest here. All right. And when we trade where? In the direction of the break, trade up. We hold this trade until moving average cross or until you're satisfied. So if you got in here at the highest point, that's 360 pips. After the moving average cross, that's 200 pips. 200 to 360 pips of play off one trade. And you see, you're not trading every day. Anything, the way you look at this, guys, is that you have to look at the charts not for the sake of trading after you enter the trade, but to but for the sake of looking to see if the moving average is going to cross again. Right? That is the indication we need to see to determine whether we hold the trade longer or whether we look for our exit. All right. So let's continue to do so. Like I said, I have not changed the time frame. Okay. So we got this. All right. We got the moving average cross. Let me make sure I make this bigger to highlight the moving average cross. And then we look for a break and retest. We don't want to see some type of structure breakdown. We're going down to the downside. So we want to see support be broken, and then we want to see that same area come back and be tested, right? We know that when support is broken, it turns into resistance. So we got that. This, I don't know why it does this, but we're gonna make it straight. All right, we got a support, we got a break of structure or BNR, break and retest, right? And we enter in for the trade. And we hold the trade until there's a moving average cross. We can't let we're not being phased by price action. Our determining factor is a moving average cross. Right. So you have to be patient. Can't allow these moves to shake you. So if you got in here and this is at the lowest, 470 pips after the moving average cross, that's 230 pips. What am I saying? Well, I'm saying that you're gonna be profitable. This trade strategy is easy because you don't have a lot of different confluences. You're not looking for all the big fancy words. You're just looking for moving average cross and a break and retest. And once you enter the trade, you monitor it by just simply seeing if there's a cross, a crossing of the moving averages. And I'm staying on the same time frame. All right. Now to solidify this strategy, I want to come to a more recent turn of events and go into the H1 because that's the time frame that I am using for this strategy. And I'm doing that because the whole purpose is to get the benefits to trade Forex like I'm trading on the stock market. We understand the stock market is very slow. We're not talking about the margin sizes, we're talking about the safety. The safety of the stock market is in how slow it moves. You may get a $10 move in one day, right? And as you can see with gold, we've been getting tons and tons of dollar moves, right? But with this strategy, you just wait. You literally wait, right? So moving average cross, and then some. I mean, like even with the H1, you may have to do it. Whatever is good for you to see the moving average cross. Now, obviously, for me, the H1 is perfect. It's spaced out enough for you to see that it's going up, right? So only thing you have to be mindful of is you be mindful of the risk to reward ratio. All right. So let's go. We got the moving average cross right here. We want to insert that. What is this doing? I didn't even do this. All right, we got the moving average cross here. Give me an object. We got this crossed up and gave you some time. We see a break and retest. We did see the minor. Let me zoom in because it was ranging. Okay, this particular day was straight range. All right, so break and retest. We have this. It broke up, and then this is where we enter. Right, it's really it's slim because it's on a 1 hour chart, but that's what we're looking at. Break and retest, and we trading to the upside. Right, so it looked like a range. We had a break and retest to the upside, and then as you can see, you would still be in this trade some days later. So if you got in this trade January 19th, you would still be in this trade some 9 days later. So 1, 2, 3, 4, 5, 6, 7, 8. So 8 days later, I know it was a weekend somewhere in here, but 8 days later, you would still be in this trade. And so you will be up. If you got in this trade, you'll be up 84, 8,400 pips. If you got out at the highest that it had ever been, you would have been that's 9,300 pips off one trade. 9,300 pips off one trade. If you took a point zero one, that's $930. If you took a point one, that's 900. It's $9,300. If you took a standard lot trade, that's $93,000. If you took 10 standard lot trades, that's 930,000. What's my point? I'm saying this is the easiest strategy. The most simplest strategy to trade has got better by just adjusting the moving average is going from 50 to 100 moving average to 20 to 50. Okay, so I'm gonna let this finish up. I'm gonna post this to my YouTube channel, and then I'm gonna post this to the Facebook group. So, all right, yeah, have a good one.